This agency, this FSOC, the Financial Stability Oversight Council, is acting on behalf of the American people and on behalf of consumers, or if they are protecting sleazy banks that stay in business, whose whole business model is cheating consumers. I reserve the balance of my time.
The gentleman reserves the time. The gentlelady from West Virginia.
Yes, Mr. Chairman, I claim time in opposition.
The gentlelady is recognized for 5 minutes.
Thank you, Mr. Chairman. And I think I understand the gentleman from North Carolina's amendment. But I would like to just start in the 5 minutes that I have to remind everybody who is on the council that is going to be able to allow sleazy financial products to go forward to save the safety and soundness of an institution. That's what the gentleman said. So we've got the Secretary of the Treasury, we've got the Chairman of the Federal Reserve, the Director of the CFPB, who is the person who is making the regulations, Chairman of the FDIC, Comptroller of the Currency, Chairman of the NCUA, Chairman of the SEC, Chairman of the CFTC, Director of the FHFA, and an insurance representative. That's 10 people, professional regulators that are working in certain areas of the financial markets or overseeing our financial stability. It's not Tom, Dick, and Harry off the street trying to figure out if a certain provision, sleazy provision, should be allowed to go forward. And I think in order to convince these folks or to put your argument forward as to why the rule or regulation would harm the safety and soundness of an institution, I would imagine that these professionals would require much due diligence and proper background work, probably touching on some of the things the gentleman's already talked about, who would be influenced, and an analysis of the practice of the practice as the subject matter of the regulation or provision. I think that the standard is high in any scenario. Certainly it's impossible in the existing bill, but in Mr. Duffy's bill, which brings the standard down more in line with protecting community banks and credit unions and other institutions on Main Street and the consumers that so rely on them, that I think really this amendment just further complicates, places in jeopardy, I think makes it more cumbersome, more impossible to meet a standard where the FSOC would be able to oversee a certain rule and regulation. So I would oppose the gentleman's amendment.
Is the gentlelady reserve or gentlelady yield back?
I'll reserve my time.
Gentlelady reserves the time. Gentleman from North Carolina.
How much time do I have remaining?
Gentleman has 1 minute remaining.
Thank you, Mr. Speaker. One of the changes that doesn't sound like it does much but really does is when we change the word may to shall. It not only can this FSOC overturn a rule when they think it might affect the safety and soundness of the system, they have to overturn it. They have to overturn it if they think it's going to put a specific bank out of business. That's not a small change. That's not a high standard. That is a very low standard and is one that completely cripples the bill. I yield the balance of my time to Mr. Frank.
Let me say to my friend, and I thank him, if somebody had put Countrywide out of business, we'd have been in good shape. But the bias of the Republicans here against consumers and for the banks is made clear. A later amendment will require the Consumer Bureau to submit very much this kind of information to the Financial Stability Council. So it's not reciprocal. If the Consumer Bureau, under their amendment, has a rule or regulation, it has to give all this information to the Council, but nobody else does. It is one more example of how the Consumer Bureau is not at all their favorite.
Ms. Virginia is recognized.
I yield back the balance.
The gentlelady yields back her time. The question on the amendment by the gentleman from North Carolina. All those in favor say aye. All those opposed say no. Opinion of the chair, the noes have it. The amendment is not.
Mr. Chairman,
yes.
On that ask recorded.
Pursuant to Rule Clause 6, Rule 18, further proceedings on the amendment offered by the gentleman from North Carolina will be postponed. Now, in order to consider Amendment Number 6, printed in House Report 112-172, for what purpose does the gentlewoman from Texas rise? Clerk will designate the amendment.
Amendment Number 6, printed in House Report Number 112-172, offered by Ms. Jackson Lee of Texas.
Pursuant to House Resolution 358, the gentlewoman from Texas, Ms. Jackson Lee, and a member opposed shall each control 5 minutes. The gentlewoman from Texas is recognized.
My friends are back again, those that we have a great deal of respect, and I'm reminded of my colleague, Congressman Cummings, who mentioned the enormous amount of foreclosures that our military families experience. Maybe we're not clear on what our new board really does. The Consumer Financial Protection Bureau. Let me make it clear. It makes prices clear. It makes terms and conditions clear. It ensures that mortgage disclosures are short, relevant, and understandable by consumers and lenders and military families. It lets consumers shop for the best product of that price, helps consumers understand the true cost of a financial transaction. It acts like a cop on the beat for our consumers. The Financial Stability Oversight Board has its role to review the actions. But let me tell you what this bill has just done. In the Dodd-Frank bill, it's been a defined time schedule for the review to take place. So if you are, in essence, hanging with a bad foreclosure or some bad actions, this oversight board can review quickly the decision that the Consumer Board did to protect you. But you know what has happened now? They have given the oversight board an indefinite amount of time. This is in the backdrop of undergraduates carrying record-high credit card balances, $3,173. What my amendment does, it restores reality. It restores a definitive time, a time certain that the Oversight Board can review the regulation that has given you relief so that you can benefit from the consumer protection. Is that not a simple premise? I ask my colleagues to accept this amendment, and I reserve my time.
The gentlelady reserves her time. The gentlewoman from West Virginia.
I claim time in opposition.
Gentlelady is recognized for 5 minutes.
Thank you. What we have done in our bill is, as the gentlewoman said, is to give the FSOC as much time necessary to evaluate the effects of a CFPB rule. I mean, it's easy to imagine under any scenario that some of the effects, good effects or bad effects, take more than 3 months to really surface. I mean, we saw what happened with the subprime issue. It didn't bubble up in 90 days. It bubbled up over a period of time. Should it have been stopped? Absolutely. Were people asleep at the switch? Absolutely. And that's why we think that you should have not constraints on the time, but you should have an open-ended time period to find out any different pitfalls that may occur from a certain rule and regulation. And so that's why I would oppose the gentlelady's amendment going back to the 90 days, and I would continue to reserve the balance of my time.
Gentlelady reserved. Gentlelady from Texas.
I have great respect for my friend from West Virginia, but I'm so glad she said 90 days. My friends, that is 3 months. They want to take away 90 days and put it forever. Almost like Dorothy, we're going to the Wizard of Oz, Land of Oz, forever and ever and ever. And so individuals like Michelle, whose home was damaged during the hurricane, who got costly repairs but had wage cuts and then found that their house might be in foreclosure, they sent the company $1,400. The company told them there was nothing they could do and they were foreclosed on. The Bureau, being able to protect them from that, now has oversight over positive regulation, and that oversight to review it or to eliminate it goes on and on and on while Michelle and her husband walk the streets. Or Jacob, who wanted to just come as a retired mechanic to buy a CD. He wanted to speak to a financial advisor. He was talked into buying a $3,000 upfront fee. The man he talked to wasn't even in the bank. He only made $25,000. He wound up losing $12,000. They want Jacob to wait forever and ever and ever. With that, I reserve my time.
Gentlelady reserves. Gentlelady from West Virginia.
I appreciate the gentlelady's passion for this, and I would like to say that my opposition, as the 90-day rule stands right now, it doesn't say that the rule can't go forward. It simply says that the ability to have a look back to what consumer rules or regulations are put forward. It widens the window there. So some of the effects of a rule and regulation that may, as I said earlier, may not bubble up until a year or two. It may have a cumulative effect. It may be that it may have a regional effect. I mean, we know we have friends in Georgia right now who've had a lot of bank foreclosures. It's more regionally placed. All the foreclosure problems, I live in a place actually where we've avoided a lot of the foreclosure problems, but I understand my fellow members from California and Florida and Texas and Michigan and Ohio, you know, they have regional issues. So I think this just simply, it doesn't allow the rule to go, it doesn't say you can't allow the rule to go forward. It simply says that, that it allows you to look back for a longer period than 90 days. And I would yield back the balance of my time.
Gentlelady yields back. The gentlelady from Texas has got a minute.
I thank the gentlelady. I'm asking my colleagues to support this amendment, which restores the 3-month review. There are people in America that don't even know what their interest rates are on their credit card. The Consumer Protection Bureau will help that. We need oversight that is refined and defined to be able to protect the consumer. With that, I yield to the gentleman from Massachusetts, ranking member.
How much
For a
time
minute and a half.
is left, Mr.
Minute and a
Chairman?
half. 1.5 minutes.
Once again, we see this pattern. And the gentleman in New Jersey objected before. He said I was imputing motives to them. Yes, I was imputing to them the notion that they knew what they were doing last year when they overwhelmingly, unanimously opposed an independent agency. I don't know who's kidding whom. They don't like the idea of an independent agency. They do know that politically it's kind of popular. So the tactic is to chip at it here and chip at it there and to do a series of non-reciprocal requirements. It is clearly the stepchild, the Cinderella of the financial regulators. It's the only financial regulator that can be overruled by the other financial regulator. They say, how can you have an individual entity? But members have been here 20 years in comparable times. They've never moved to make the control of the currency a commission. They've never moved to subject the control of the currency to the appropriation. The consumer chief is just like the control of the currency, but that's a banking agency. That's one of those agencies that the chairman of the committee says is there to serve the banks. And as he said in his statement today, they don't worry about the Federal Reserve, the FDIC, with the terrible record the Federal Reserve has had on consumer protection. He said, the chairman of the committee from Alabama, we are worried about an agency whose sole goal is to protect the consumers. So this is one more thing. When it comes to other agencies, my colleagues on the Republican side want to impose deadlines.
Gentleman's time has expired.
Speed. Don't have it hang over.
Gentleman's time has expired.
But no,
Gentleman's time has expired.
Is treated differently.
Gentleman's time has expired. Question on the amendment offered by the gentlelady from Texas. All those in favor say aye. Aye. All those opposed say no. And the chair, the ayes have it.
I'd like to ask for a recorded vote.
Pursuant to Clause 6 of Rule 18, further proceedings on the amendment by the gentlewoman from Texas will be postponed. It is now in order to consider Amendment Number 7, printed in House Report 112-172. For what purposes the gentleman from Illinois seek recognition?
There is an amendment at the desk.
The clerk will designate the amendment.
Amendment number 7, printed in House Report number 112-172, offered by Mr. Quigley of Illinois.
Pursuant to House Resolution 358, the gentleman from Illinois, Mr. Quigley, and a member opposed shall each control 5 minutes. The gentleman from Illinois is recognized.
Thank you, Mr. Speaker. I rise today in support of my amendment to H.R. 1315. The underlying bill requires that when the Financial Stability Oversight Council meets to deliberate on a CFPB ruling, those meetings would be open to the public. My amendment takes that one step further and will require that the meeting be live streamed over the Internet. If what we're concerned about here is transparency and openness, it makes sense that the entire American public have access to these meetings through the Internet, not just people in one city. This is important for both supporters and critics of the CFPB. If a CFPB ruling is challenged by the FSOSC, Americans should be able to observe the proceedings. My amendment would do just that. It makes the proceedings more open, more transparent, and accessible. Transparency would help ensure that all parties, banks and consumers, get a fair hearing. It's also important in terms of regaining the public trust, especially in these times. According to a Pew poll, only 22% of Americans trust government to do the right thing. What does that mean? That means that 8 out of 10 people in this country think that government will do the wrong thing. The real cost of corruption is a deficit of trust. That is, it is almost impossible to lead without the public's trust. What we need to focus on first and foremost is regaining that trust, principally through transparency. Therefore, I ask that this amendment be supported by both sides. I reserve.
The gentleman reserves his time. The gentlelady from West Virginia.
I claim time in opposition, but I'm not opposed to the gentleman's amendment. I would just like to congratulate the gentleman on an amendment that provides for sunshine and transparency. When we did the markup, we actually had another amendment along the same lines, and I would support the gentleman's amendment. And with that, I yield back.
Gentlelady yields back.
Thank you. I yield back.
Gentleman yields back. Questions on the amendment by the gentleman offered to the gentleman from Illinois. All those in favor say aye. All those opposed say no. Pin the chair as the ayes have it. The amendment is agreed to. It is now in order to consider Amendment Number 8, printed in House Report 112-172. For what purpose does the gentlewoman from California seek recognition?
Thank you, Mr. Speaker. I rise today to present my amendment to H.R. 1315.
All right, clerk will designate the amendment.
Amendment number 8, printed in House Report number 112-172, offered by Ms. Chu of California.
Pursuant to House Resolution 358, the gentlewoman from California, Ms. Chu, and a member opposed will each control 5 minutes. The chair recognizes the gentlewoman from California.
Thank you, Mr. Speaker. My amendment would give additional responsibility to the commissioner that is already in charge of oversight of the Bureau's activities pertaining to the protection of older consumers, minorities, youth, and veterans. It would require research on how language barriers can lead to unfair and abusive lending practices, and to report to the full Commission on ways to protect consumers from potentially unfair and deceptive practices. Take the case of Ms. Huang, who went to a car dealership and negotiated a car sale with a salesperson in Chinese. But then when she went to sign the contract, it was totally in English and she didn't understand it. When she got it translated later, she discovered that she bought a different car at an extremely high interest rate. She went back to the car dealership for redress, but they refused. She was so upset that all she could think of to do was to go back to the dealership and wrap herself in a white sheet and hold a sign that said cheaters and walked up and down in front of the dealership in protest. Well, that gained attention. It turned out that many other immigrants had been cheated in this manner as well. So I sponsored a bill in the California State Assembly to address these deceptive practices. But that's just one state and just one small fix. Now, I know that the Consumer Financial Protection, Safety, and Soundness Act does not include oversight of auto loans, but Ms. Huang's story highlights how persons with language barriers can be victims of deceptive practices. We need someone on a national level looking out for people like Ms. Huang and staying on top of ways people are being duped because of language barriers. And that's just what my amendment will do. I urge support of my amendment, and I reserve the balance of my time.
The gentlelady reserves the balance of her time. The gentlewoman from West Virginia.
Thank you, Mr. Chairman. I claim time in opposition, but I'm not opposed to the gentlelady's amendment.
Without objection.
Thank you.
The gentlelady is recognized.
I'd like to thank the gentlewoman for her amendment. I would like to also highlight in the Dodd-Frank bill, and I'm sure she's well aware of some of the provisions that are already being made through the CFPB for multilingual outreach and understanding. During a conference call with a large bipartisan congressional staff, the senior officials at the CFPB indicated that the Bureau would have the capacity to translate into 180 languages. That is a very broad reach, I think. And there are other foreign language disclosures, outreach by the Secretary of the Treasury to help people, persons facing language barriers, and other aspects of the same, around the same issue that the gentlelady is speaking about. I am delighted that she wants to amend the Commission, and because, as we know, and I've spoken more than a few times on just in the last several hours about my ardent support for the Commission. There's one commissioner that's charged with overseeing some special segments of our population, and certainly ones who have language barriers would be included in this. And with that, I yield back the balance of my time.
The gentlelady yields back. The gentlelady from California.
I'd like to yield to the gentleman from Massachusetts.
The gentleman is recognized for 3.5 minutes.
Well, I appreciate the gentleman West Virginia making a very important point, seriously, that talking about the multilingual aspect, because an important bipartisan part of our committee's work over the years, and we've had some differences, but the gentleman from Illinois, Ms. Bigger, the gentleman from Texas, Mr. Hinojosa, and a number of others have stressed that an important part of this agency's mission is financial literacy. We all agree that if people were better educated, they could defend themselves better. And this is an ongoing joint effort on our committee. And obviously, if you're trying to do financial literacy, it's got to be in a language that people can understand. So I appreciate the gentleman highlighting that, and it does help us do that. I would note that, and I think the gentleman from California is quite correct in wanting to do this, but you don't need a commission to do it. If it weren't a commission, we could do it with various agency heads. For example, there's been some concern about making sure that veterans are taken care of. You know, one of the things that, and people in the military, one of the things that Elizabeth Warren did, and she did a number of extraordinary things, was, I don't know if people are aware of the head of the military bureau that protects members of the services, a very experienced woman from the military named Holly Petraeus, the wife of General Petraeus. And that's an example of how you can do these things. So the principle that the gentlewoman from California advocates is a very good one, and I'm sure we will find a way to accommodate it. And I thank her, and I yield back to the gentleman from California.
Gentleman yields back. Gentlelady from California.
Yes, I would like to say that this does not create any overly burdensome responsibility. Instead, it supports the goal of the legislation, protect those persons who might be the victims of such unfair and deceptive practices. What this does is clarify that this specially designated commissioner would take into account how language barriers might be impacted by such abusive practices, and it makes sure that that is done. I yield back.
Gentlelady yields back. The question is on the amendment offered by the gentlewoman from California. All those in favor say aye. Aye. All those opposed say no. Pending the chairs, the ayes have it. The amendment is agreed to. It is now in order to consider Amendment Number 9, printed in House Report 112-172. For what purpose is the gentlewoman from New York seek recognition?
I have an amendment at the desk.
The clerk will designate the amendment.
Made in order.
Amendment number 9, printed in House Report number 112-172, offered by Mrs. Maloney of New York.
Pursuant to House Resolution 358, the gentlewoman from New York, Ms. Maloney, and a member opposed shall each control 5 minutes. The chair recognizes the gentlewoman from New York.
Thank you. I rise in support of my amendment to H.R. 1315, which will transfer all authority that the CFPB would receive to the Secretary of the Treasury if no commission chair is in place by July 21st, until such time as the confirmation by the other body. There is no more blatant effort to derail the consumer protections than the section of this bill that delays the full transfer of authority that the CFPB would have to protect consumers until a director is in place. Under the Republican bill, the Bureau would not be able to do anything, starting today, even write rules under the existing consumer laws as Dodd-Frank envisioned. And as we know, there are 44 Republican members of the other body that have indicated in writing with a letter to the President that they will not vote to confirm anyone unless President Obama bends to their demands that would weaken the CFPB. The Republican bill is not about improvements. It's about preventing the CFPB from effectively operating. This week, the President nominated former Ohio Attorney General Richard Cordray to be the CFPB's first director. And he is now the Director of Enforcement there and will bring a voice for state AGs to enforce consumer laws. I hope that the other body will act on his nomination as soon as possible. But we know that there are 44 who say they will not confirm anyone. And I do not believe that consumers should have to wait for this process to go forward. They should be protected today. My amendment says that if they are going to delay the ability of the agency to protect consumers, at least give that authority to the Secretary of the Treasury until a director is confirmed to head the Bureau. Now, many of my colleagues on the other side of the aisle have indicated they're concerned that there's no one officially at the helm. Then let Treasury have that authority until a director has been confirmed so that it can begin to go forward with the protections that Dodd-Frank envisioned. This includes the authority the Bureau is set to receive today, as well as the new supervisory authority for non-bank financial institutions and new rulemaking under unfair, deceptive, and abusive practices. Consumers should not have to wait any longer. My amendment will ensure that work can begin to advance the important mission of the CFPB, and I urge my colleagues to support this amendment, and I reserve my time.
The gentlelady reserves her time. The gentlewoman from West Virginia.
I claim time in opposition to...
The gentlelady is recognized for 5 minutes.
Yeah, and I am opposed to the gentlelady, my ranking member. We work really well together, I think, on the subcommittee, and we obviously have differences, and this is one. The portion of the bill that she's talking about is actually the portion that I created, and it was really a creation of a couple of months ago. Probably in April, I began to think to myself, the President hasn't made an appointment to the marquee bureau to protect consumers, and he's had almost an entire year to do this. The handwriting was going to be on the wall in terms of trying to get a Senate confirmation. Certainly, you're not going to get one in 4 days, which is what he tried, when he nominated somebody on Monday, finally. And so the thought for me is that we have enormous powers vested in one individual. The bill was written to have them, and the minority leader was down here saying that the oversight that is provided by a Senate confirmation is the Congress's stamp of approval of the direction this individual wants to take this agency, and yet, or bureau. And yet, we have a situation where we have a president who's waited an entire, 361 days before making an appointment, and we're in a position where we're going to have an acting or a recess appointment in place with a very powerful position without any input or oversight in the nominating process that moves forward and is vested in the United States Senate. And I just think that's a problem. I think that the President had due time to accomplish this, and we're going to say to the Treasury Secretary, we're going to give it to you. Quite frankly, I think the Treasury Secretary is pretty busy right now dealing with debt limit issues and solving trying to solve other problems that we have in front of us, financially and our economy. We have 9.2% unemployment. We've got to get the wheels turning here, and I'm sure that's where the Secretary is putting his energies, appropriately so. And so I just think that this is an agency that's starting with one hand tied behind their back because of the fault of the chief executive, who has not appointed a person that could seek and get Senate confirmation. And I think that without that person, with the oversight of a Senate confirmation, taking the reins of this very powerful bureau that's just been created, I think we'd be getting it off on the wrong foot. And so I would oppose the gentlelady's amendment.
Back, the gentlelady reserve.
I'll yield back my time.
Gentlelady yields back. The gentlelady from New York.
May I inquire as how much time remains?
Gentlelady has 2 minutes remaining.
Well, first of all, the President has made an appointment, and he confronts a threat by 44 members of the other body who says they won't confirm anyone unless the powers of the CFPB are diminished and it's defanged and weakened. And consumers should not have to wait for a political confirmation process that the Republicans in the other body have vowed that they're going to hold up. They should be able to move forward with these critical protections and go forward. I must tell you that the American public is fed up with the delays and the efforts by the other body to prevent consumer protections. If we'd had a CFPB in place, we could have prevented the financial downturn in 2008, which caused the high unemployment that the gentlelady is concerned about. So the CFPB is carefully constructed, urgently needed, and should be allowed to go forward to protect consumers. My amendment will allow that to happen. I urge my colleagues to support it, and I yield to the ranking member.
Being lectured by a member of the Republican Party on the importance of confirmation at the CFPB is like being lectured about birth control by the Octomom. 44 Republican senators have outrageously announced that they will not do that constitutional duty, and they will confirm nobody, no matter how good, until we agree to weaken the agency. So what we have is a perfect double play here between House and Senate Republicans. Senate Republicans say we will confirm nobody. House Republicans say the agency won't function until you get a confirmation, which the Senate Republicans have refused to do. I wish the President had appointed someone earlier. I'm critical of him for doing that. But I don't want to punish the American people, the beneficiaries of this, by that failure to appoint earlier. And by the way, with the Secretary of the Treasury having the authority until now, a lot's been done. Holly Petraeus was put there. A lot of other people were there. They've done some good stuff. So let's not give in to the Republican blackmail in the Senate.
The gentleman's time has expired. Question on the amendment offered by the gentlewoman from New York. All those in favor say aye. All those opposed say no. Pin the chair. The ayes have it.
I'd like to ask for a recorded vote.
Pursuant to Clause 6 of Rule 18, further proceedings on the amendment offered by the gentlewoman from New York will be postponed. What purpose does the gentleman from Oregon seek recognition?
I would ask a unanimous consent that my request for a recorded vote on amendment number 3 be withdrawn.
Okay. Without objection. Clerk will redesignate the amendment.
Amendment number 3, printed in House Report number 112-172, offered by Mr. DeFazio of Oregon.
Is there objection to the request of the gentleman from Oregon? Without objection, the request for the recorded vote on amendment number 3 is withdrawn. The amendment stands adopted by voice vote thereon. It is now in order to consider amendment number 10, printed in House Report 112-172. For what purpose does the gentleman from Oklahoma seek recognition?
Mr. Speaker, I have an amendment at the desk.
The clerk will designate the amendment.
Amendment number 10, printed in House Report number 112-172, offered by Mr. Langford of Oklahoma.
Pursuant to House Resolution 358, the gentleman from Oklahoma, Mr. Langford, and a member opposed shall each control 5 minutes. The chair recognizes the gentleman from Oklahoma.
Thank you, Mr. Speaker. Similar to Mr. Quigley's amendment earlier, this amendment is to provide transparency. His amendment was to provide transparency to CFPB meetings. This amendment brings transparency to the regulatory process, the decisions, the cost, the staff structure. Both parties want reliable information from the inspectors generals of every agency and of this Bureau. Congress has a responsibility for oversight, and that responsibility is not possible without good information. This will make the CFPB consistent with other agencies and oversight transparency. Because this new Federal Bureau is within the Federal Reserve, we must provide Congress, citizen watchdog groups, and the general public with the tools for proper oversight. The Langford Amendment will put in place a mechanism for Bureau transparency. Specifically, this amendment would require that the Inspectors General of the Board of Governors of the Federal Reserve, the Consumer Financial Protection Bureau, to post online and submit an annual report to Congress each February the 1st, illuminating 4 key elements in the Bureau's operations during the previous fiscal year. A list of all new rules, guidelines, regulations prescribed by the Bureau within the previous fiscal year with corresponding descriptions of each. Number 2, a detailed list of all authority that the Federal Reserve's Inspector General deems in conflict with other federal departments and agencies. Number 3, an administrative expenses of the Bureau, including the amount spent on salaries, office supplies, office space. And number 4, the current balance of the Bureau of Consumer Financial Protection, their fund itself. As lawmakers, we have to have quality information at our disposal to conduct our constitutionally required duty of oversight. This report required by this amendment would provide Congress and the public a broad look into the operations of the Bureau. With that, I reserve the balance of my time.
The gentleman reserves the balance of his time. The gentleman from Massachusetts.
Mr. Chairman, I rise in tentative opposition. I could be persuaded later not to be.
For 5 minutes.
But I am the only speaker, and since I am defending the committee's position, I will reserve the balance of my time because I'm my only speaker.
Gentleman reserves. Gentleman from Oklahoma.
would you like to? Yeah. I yield to Goulet from West Virginia.
Goulet is recognized for 5 minutes.
Thank you, Mr. Chairman. I would just like to tell the gentleman I support his amendment, and I think it lends itself again to transparency and full accountability, and I thank him for bringing it forward. So good work from the gentleman from Oklahoma.
Gentleman yields back. Gentleman from Massachusetts.
Has the other side yielded back all its time? I won't be speaking until they've done that because I'm my only speaker and I get the right to close.
All right. Gentleman reserves the balance of his time. The gentleman from Oklahoma.
I'll yield back.
Gentleman yields back. Gentleman from Massachusetts.
Mr. Chairman, I appreciate the amendment, and I've had a chance to think about it, and I am persuaded by its merits. I think this is a genuinely helpful amendment. But I do want to take this opportunity, this 5 minutes, to talk about broader issues. And I do so, I will say, I would not ordinarily have done this, to take this 5 minutes in this way, but the rule was so outrageously stingy in refusing adequate debate time on some central issues that we have no option but to use this perfectly reasonable amendment as an opportunity to say what we were prevented by the rule from saying. By the way, there's one part of the rule that should be mentioned that I didn't have time to talk about earlier. The regular order that my Republican colleagues promised has been beat up pretty good recently, and certainly by this rule. The Congressional Budget Office says that their effort to expand the head of the Consumer Agency to a 5-member commission will cost $71 million over the 5-year period. Now that violates their cut-go rule, but they don't care that much about violating the rules when it suits the ideology. But they found an offset. What's the offset? The offset is a bill that the House already passed to save money from the Federal Housing Administration, the FHA. So here's what they're doing. They're reaching back, and the rule retroactively merges the two bills. How's that for the regular order? It's a rule that retroactively takes a bill that already passed, it saves money within the FHA, and instead of using that either for deficit reduction entirely or for easing people's ability to get housing, it uses it to offset their extra bureaucracy here in this bill. Beyond that, I want to talk again about the fundamental issues. Some on the Republican side have apparently undergone a conversion. I don't want to not take yes for an answer. Apparently they are now in favor of an agency that they vigorously opposed last year and the year before. We had a special markup. The gentleman from Alabama incorrectly said he never voted against this. Well, someone claiming to be the gentleman from Alabama attended a markup when we voted on this in committee and voted against it, as did the gentleman from West Virginia, as did virtually everyone on the Republican side. Instead, they supported a substitute from the gentleman from Illinois, which did nothing. Well, I take it back. It said that all the regulators should get together, plus the Secretary of Defense, the Secretary of the Treasury, I don't know who else, and they could set up a hotline for consumers and have a website. But any information taken in would go back to those same regulators. So they have consistently opposed it, and that's why they're so wounded. How dare we say that they're not in favor of this agency? Because we were there when they tried to kill it. We were there when they voted against it. And we understand that they don't want to see it go forward. They are prudent, however. They understand that it would not be a good idea to attack it head on. So they're trying a sideways attack. Most importantly, by saying that the bank regulators, they wanted to leave consumer protection with the bank regulators. That was the biggest substitute. The FDIC, the Federal Reserve more than anybody else, because they're the key bank regulator in consumer affairs. I don't know who came up with that. They would put the bank regulators back in charge of this agency by letting them overturn by majority vote anything the agency does. And they say, well, we're just going back to where you were. No, we were never for that. You, in fact, were totally reversing. And now we have the amendment of the gentlewoman from New York. And the gentleman from West Virginia, you know, there's a children's book where somebody says, I can believe 10 impossible things before breakfast. Well, I'll give the gentlewoman credit for moderation. She only said one impossible thing before dinner. She said we must have a confirmation. Confirmation is important. She should tell that to her Senate colleagues. 44 Republican senators not the senator from Massachusetts, Mr. Brown, and the senators from Maine, Ms. Collins and Ms. Snow, 44 of them, enough to filibuster, have said, we won't confirm anybody. So I hope someone will explain to me, how can the manager of the bill get up and say, confirmation is important. We can't allow this to go forward unless there's confirmation. We won't allow the powers to go forward unless there's confirmation, knowing that there can't be confirmation, not because the president was late, as he was, and I was critical of him for doing that, but because the Republican majority says they won't confirm. And then they complain there might be a recess.
Gentleman's time has expired. Gentleman's time has expired. Questions on the amendment offered by the gentleman from Oklahoma. All those in favor say aye. All those opposed say no. Pending the chair, the ayes have it. The amendment is agreed to. It is now in order to consider amendment number 11, printed in House Report 112-172. For what purpose does the gentleman from Virginia seek recognition?
Mr. Chairman, I have an amendment at the desk.
The clerk will designate the amendment.
Amendment number 11, printed in House Report number 112-172, offered by Mr. Ridgell of Virginia.
Pursuant to House Resolution 358, the gentleman from Virginia, Mr. Riggle, and a member opposed shall each control 5 minutes. The chair recognizes the gentleman from Virginia.
Mr. Chairman, Americans across this great land are hurting. Families are being hurt by excessively high unemployment. It's right now at 9.2%. In the 2nd District, it's high, and my wife Terry and I have dear friends who have lost their family businesses because of, I think, policies that have come out of this very institution, a hyperactive federal government. So I rise today to offer an amendment that would directly address one of the principal reasons that I believe that our small businesses are having such a difficult time. And I know this firsthand because I am a small business owner, and that's a lack of credit. My amendment would require the Consumer Financial Protection Bureau to submit a financial impact analysis on each proposed rule or regulation that it intends to layer upon our nation's lenders. It would expand the cost analysis to include financial institutions of all sizes, not just the smaller ones that are currently being under the cost analysis portion of the bill. And most importantly, though, the amendment would require the Bureau to submit an analysis to the Council on how the proposed regulation would impair the ability of individuals and our small businesses to access credit. I spent a lot of time, Mr. Chairman, in our district listening to small business owners and our local community bankers, not the big banks up in New York, but the local banks, and they've given me a clear indication of the struggle that our small business owners are having when it comes to acquiring credit. They're saying, Scott, we're not hiring account executives to go out and meet with our small business owners. We're hiring regulatory analysts to figure out and sort through Dodd-Frank, and now there's just yet another layer that's coming upon our local lenders. They're really struggling. So, Mr. Chairman, what I've done in this amendment is to offer a reasonable solution. It just would require that Bureau to pause and to calculate and to distribute to the public a clear indication of the impact that the regulation would have both on the lending institution and on credit for our small business owners and individuals. I believe this is a very prudent bill. Given the hyperactive nature of our federal government, it continues to grow, it continues to reach out and I think choke out the life of the small business entrepreneur. So I would urge my colleagues to support this amendment. It really is about confidence. I think that the hard-working folks that I know in the district, they want to know that we really are going to start in a reasonable and responsible way, contain this ever-expanding federal government. Mr. Chairman, I close with this. I'm not an advocate for no regulation. I'm an advocate for smarter and lighter regulation, and I think this amendment meets that test. I urge my colleagues to vote in favor of it, and I yield back the remainder of my time.
Gentleman yields back. What person? Gentleman from North Carolina West?
To claim time in opposition.
Gentleman's recognized for 5 minutes.
I yield 2 minutes to the gentleman from Connecticut.
Gentleman's recognized for 2 minutes.
Thank you. Mr. Chairman, I was moved to come to the floor to argue in opposition to this amendment and in opposition to the underlying legislation. I was moved because the amendment offered by the gentleman from Oklahoma and the amendment offered by the gentleman from Virginia are both about reports and analyses that this new agency will be required to produce. And it's odd, because to give my friends on the other side credit, they usually stand for more streamlined and efficient government, sometimes to the point that government ceases to function, but they are about efficiency and streamlining. And yet here we're hearing about more reports and more analyses for the simple reason that this is part of a larger strategy to weigh down, to underfund, and to decapitate an agency they have no interest in seeing survive, an agency that would protect consumers, that would protect that group that was badly and most severely harmed in the disaster that we just went through. Why? One can speculate. Perhaps it's to stand for the industry, for the financial concerns. But why? Why do that? Why do that when it has been proven time and time again, not just in the last 3 years, but over hundreds of years, that financial services is a very volatile and very risky pursuit that, if not adequately regulated, will do what it has done in the last 20 years, what it has done hundreds of years prior, collapsing upon itself. This is regulation that is smart, that is common sense, and that will protect the American family from products that could destroy that family. So let's not weigh down this agency. Let's not decapitate it. Let's not underfund it. Let's let it survive to protect American families. And with that, I reserve.
Gentleman yields back.
Yields back.
Gentleman
Yield back.
Gentleman North Carolina.
Thank you, Mr. Speaker. Sometimes it really is helpful when you want to amend a law to read the law. This amendment is almost completely redundant, and where it is not redundant, it is annoyingly pointless. This is what the law already requires. Before the CFPB can adopt a rule, it has to consider the potential benefits and costs to consumers and to the financial industry. It has to consider the impact of the rules. It has to consider whether it constricts credit, whether it makes it harder for small businesses or individuals, households to get credit. All of what this amendment would require is already in the bill. And the CFPB, their rulemaking requires that they give notice that they're going to consider a rule, and then they've got to take comment, and then they've got to propose a rule, then they've got to take comment again, and they know that if anybody's against it, they've got to be prepared to defend it in court. And they've got to show that they develop the evidence that supports the rule and supports all the considerations that it actually what benefits are, what the costs are, and whether it keeps people from getting credit. What this amendment would also do, though, is to make the CFPB prepare this report when nobody's against it, when everybody's perfectly fine with it, when it doesn't hurt anybody, it doesn't bother anybody, it's minor, it's procedural. It would still require this silly, pointless report for a rule that nobody is against. I understand that some of the members, most members, do not want to make government unwieldy and filled with red tape. This amendment would just make government more unwieldy and more filled with red tape. I oppose the amendment. I yield back.
Gentleman yields back. Questions on the amendment offered by the gentleman from Virginia. All those in favor say aye. Aye. All those opposed say no. Opinion of the chair, the ayes have it. The amendment is agreed to.
On that, I ask for a recorded vote.
Pursuant to Clause 6, Rule 18, further proceedings on the amendment by the amendment offered by the gentleman from Virginia will be postponed. Pursuant to Clause 6 of Rule 18, proceedings will now resume on those amendments printed in House Report 112-172, on which further proceedings were postponed in the following order. Amendment number 2 by Ms. Jackson Lee of Texas. Amendment number 5 by Mr. Miller from North Carolina. Amendment number 6 by Ms. Jackson Lee of Texas. Amendment number 9 by Ms. Maloney of New York. Amendment number 11 by Mr. Riggle from Virginia. The chair will reduce to 2 minutes the minimum time for electronic votes after the first series of votes. The unfinished business is a request for a recorded vote on Amendment number 2 printed in the House Report 112-172 by the gentlewoman from Texas, Ms. Jackson Lee, on which further proceedings were postponed, on which the noes prevail by voice vote. The clerk will redesignate the amendment.
Amendment number 2, printed in House Report number 112-172, offered by Ms. Jackson Lee of Texas.
The recorded vote has been requested. Those in support of the request for a recorded vote, please rise and be counted. Sufficient number having risen, a recorded vote is ordered. Members will record their vote by electronic vote. This is a 15-minute vote.
As the Consumer Financial Protection Bureau opens its doors today, the House voting now on amendments and then the bill that would make changes to the agency. We want to get your take on the new Bureau and whether those changes should happen. The numbers are on your screen. Democrats, 202-585-3885. Republicans, call 202-585-3886. And Independents, 202-585-3887. The bill the House is considering would replace the director of the Bureau with a 5-member commission. It would also delay the transfer of certain consumer protections to the agency and also make it easier for other federal regulators to block the Bureau from issuing regulations. The amendment that the House is voting on now, offered by Representative Sheila Jackson Lee, would strike language, remove language from the bill that would change the majority vote required from the Financial Stability Oversight Council to overrule the Consumer Bureau regulations from 2/3 to 1/2. We're going to get to the phone calls now. Nicholas from Garrison, New York. Hey, Nicholas.
Hello? Hello?
Hi. Can you turn your TV down so we can hear what your comment?
Sure.
Thank you.
All right.
All right, go ahead. What's your comment about the Consumer Bureau?
I'm really upset that the Republicans are trying to do this. I really would very much like to know how many of them are members of this act. ALEC, which is very much opposed to anything for the consumer and is run by the corporations. This is very upsetting that they would try to go against the citizens out here. Very upsetting.
All right, well, thank you for your comment. Up next, Regina from Baltimore. Go ahead, Regina.
Hi, yes. I, too, have been very upset at listening to the proceedings today. It just seems like that this really isn't about business, that it's personal. So, with that said, I really think that they need to let the is it the Secretary of Finance that they want to oversee in place of a director?
No, actually, they want to have a 5-member commission oversee the new Bureau instead of a director.
Okay. I don't agree with that. I think there should be a director, but there is another piece where they, we the Democrats are saying, let the, isn't it the Secretary of Finance to act in that position until a director has been chosen?
I'm not familiar with that, but go ahead with your comment.
Yeah, I think they should do that if, in fact, that everything else is going to be held up until a director is in place. That's just crazy.
Well, actually, earlier this week, the President nominated Richard Cordray. He's the former Ohio Attorney General as the Bureau's enforcement chief. But I think you were mentioning all of 47 Senate Republicans have said that they would block the confirmation of any nominee unless President Obama agrees to the changes in the Bureau structure, and that is putting in place a 5-member commission instead of a director.
Again, I say it again, it just seems personal, that it really doesn't have anything to do with the business on the table.
All right, next up we go to Linwood, Washington. Is your name Cadle?
My name is Kathleen.
Kathleen, okay, go ahead.
Okay, my comment is kind of very simple but very big. I see it look like is a war between Republicans, Democrats. I am independent, and I'm talking the point of view from God issue. No one is actually right in this, and you should go really on inside the people and put your shoes inside the people shoes and see actually what you will do in that situation, because all this game playing and all other stuff they are doing is not actually the main cause of that.
So do you support having a Consumer Financial Protection Bureau?
should be some kind, the protection and all that, but should be done by the courts. This is a different situation for me. Each particular case, the courts has to have really independent power to do this kind of the judgment. And if you do another government, politics, Congress, government, or whatever it is, will never do the right judgment. So the court has to be unpolitical. And the problem is the courts in USA are political. So they are Democrats, Republicans, and they are going either side. And the law has to be from the beginning, which is constitutional law, and has to get from the beginning of the U.S.
All right. Well, thank you so much for calling, and we got your point. We're going to move to another call from New Jersey. Frida. Frida, go ahead with Hello, go ahead.
Hi. I'm just sitting here looking, because I normally look at this channel. But, the economy, like the other guy was saying, is that it's like a lot of game playing, and there's people's lives at stake. People don't know where they're going to get their next meal from. The unemployment that ran out. Everybody got to go to welfare because you're only getting for so much, And I mean, it's really sad. It is really sad because a lot of people are suffering.
So Frida, this agency was created to shield consumers from abuses involving mortgages, credit cards, lending, things like that. How do you think this is going to help what you're talking about?
As far as how this is going to help to protect, because I mean, it looks like there's, nothing. They can come to an agreement. It just seems like everything is like, it's something personal. It's not, they're not getting. It's really sad. I mean, it's really sad, and I'm a single parent. It is really sad.
All right, Michael from Arizona.
Yeah.
Go ahead, Michael. What do you have to say about the Consumer Bureau?
Well, I've been a Republican for about 20 years, and I'm very, very upset with how the Republicans are handling this. And I think next time I go to the booths, I'm going to vote Democrat. I think the Republicans are just absolutely wrong.
All right, next call now, John from Massachusetts. What's your party, John? What's your party?
I'm independent.
You're independent. So what do you think about the debate today?
I think that if there's something for the ordinary people that aren't educated as far as what's thrown in front of them without a lawyer, I think this is good. But to move it to a 5-panel person is defanging it. I think this will give the American people an option to be educated on what products they're able to get without getting ripped off by Wall Street or brokers or anybody like that. Remember, it wasn't the American people that caused this. This was caused by Wall Street and people in the government. When you separate these people that come in from companies to go into government and then leave the government to basically call it corporate espionage to tell companies how to cheat the government and put most of the burden on the poor people. I mean, it's simple as day. A nation that can't stand together won't stand. So I think you got to get all these Republicans out because half of them seem like they're separatists or white supremacists because they don't want nothing. All they want is for a certain class. And you got the gentleman that runs Fox News. Look at the problem that England is having right now. This has got to stop. There has to be sunshine shining on all this. And from what I see is the Republicans are still doing the same corrupted thing that they've been doing since the 70s and 60s. Put it all in the minorities, not educate the minorities. The dumber you have society, the more the privileged are going to take advantage. There's got to be a balance to government.
Okay, thank you for calling in. The White House has threatened to veto the legislation that the House is voting on, saying it would expose consumers to the same risks that led to the 2008 financial meltdown. The President was asked Monday about Congress changing the Consumer Bureau. We're going to continue to take your calls after we hear from the President.
We've been recently reminded why this job is going to be so important. There is an army of lobbyists and lawyers right now working to water down the protections and the reforms that we passed. They've already spent tens of millions of dollars this year to try to weaken the laws that are designed to protect consumers. And they've got allies in Congress who are trying to undo the progress that we've made. We're not going to let that happen. The fact is, the financial crisis and the recession were not the result of normal economic cycles or just a run of bad luck. They were abuses, and there was a lack of smart regulations. So we're not just going to shrug our shoulders and hope it doesn't happen again. We're not going to go back to the status quo where consumers couldn't count on getting protections that they deserved. We're not going to go back to a time when our whole economy was vulnerable to a massive financial crisis. That's why reform matters. That's why this Bureau matters. I will fight any efforts to repeal or undermine the important changes that we passed. And we are going to stand up this Bureau and make sure it is doing the right thing for middle-class families all across the country.
Our next call is from Diane from Baltimore, Maryland.
Hello?
Hello.
Hi, how are you?
Good. What do you have to say about the Consumer Bureau?
Oh, my goodness. You know what? I am so disgusted with the Republicans. I'm a Democrat, and right now at this particular moment, I am so proud to be one. Any Republican that looks at the despicable display of these Republicans, they're not thinking about the consumer. They're not thinking about me. They're thinking about politics, and you know we put them there. They're supposed to represent us, and they're clearly not.
So, Diane, the Republican sponsors of the bill say they're trying to promote transparency and accountability in the agency. What do you say about that?
Well, we do need transparency. I mean, some of the amendments that were put in, okay, I agree with. But it was clear and evident that they set out to, like they say, derail this bill, and that's what they did. And me, myself, this doesn't have anything to do with the Financial Protection Bureau, but I just got laid off of my job July the 6th of 23 years. So now I have to go on unemployment, probably food stamps. And, you know, it's just really sad. It's sad. And then both parties need to really step up and stop thinking about politics and think about the people that they are put there to represent.
Now we go to Bill from Beaufort, South Carolina.
Hi. Can you hear me?
I can. Go ahead.
Yes, I totally agree with many of the individuals that came before me. I think it's just a strategy that the Republicans have is to make our president weak. They've already said we're going to have this young man, the President Obama, one-time president. And everything that they do is towards that goal. And we, the individuals, the people, are thrown under the bus by them. That's what I think.
So what do you think this new Bureau will do for you?
It will help me, protect me from the long shot, raise my Visa card rate without all these charges. I mean, a lot of stuff we're not aware of, and so that will help us. This Consumer Financial Protection Bureau will help us to help us, to make our bills lower, things of this nature,
So, Bill, are you a Democrat?
Yes, I am.
All right. Well, thanks for that call. Regina, you're a Republican then from Baltimore? Regina? Looks like we lost that call. Moving on to an independent, Sue from Henderson, Pennsylvania.
Hello.
Hello.
Thank you for taking my call. I'm calling. Are you there?
Sure. Go ahead.
Yes. I'm just calling to view my opinion. I'm an independent. And just watching the behavior of our elected officials in Washington, D.C. is really astonishing. It's almost insulting to the American public. Getting to the Consumer Financial Protection Bureau that is being voted on as we speak, it's quite obvious by looking at the votes. The Republican Party wants this denied. They don't care about accountability. They may state that they do, but they don't want to be accountable for what they voted on in the past or what they even say that they will do to protect the people or represent the people that have voted for them in the past. They are all in Washington at this time, basically putting up as many bills to vote on to just get away from what is really necessary to do to get this country moving forward. Anything that can make the existing party that is I guess in charge at this time, we have a Democratic president, to make them look bad. And quite honestly, what is most disgusting is it's okay for us to increase our financial debt and spend an enormous amount of our overall budget to rebuild Iraq, to rebuild Afghanistan, to help all these other countries that really don't like us. Okay, I can understand going after Osama bin Laden, but why don't they care about helping the American public, reinvesting in the American citizens? It's just quite so obvious that the Republican Party wants to destroy the lower class, the middle class, pad their pockets from the people that pay for their campaigns and give them all these sidekicks that can afford to have lobbyists on Capitol Hill. It's just very, very sad what's happening to our country.
Right now, the House is voting on an amendment and a series of amendments leading up to a vote on final passage of a bill that would change the Consumer Financial Protection Bureau. It would replace the director with a commission of 5 people. The next call is from Neptune, New Jersey. Sasha, what are your comments? Sasha?
Lawmakers.
Go ahead, Sasha.
I'm very disappointed in our lawmakers. I think they're playing political games, and there are so many Americans who are hurting. What will this bill do? What would it have done if it stays intact with one commissioner? It would have helped people like me when we get loans and when we get credit cards not to be surprised when our credit card percent goes from 15 to 35, which is usury. So it will help outlaw usury, which is going on today. I also think that the CEOs of these big companies that don't pay their fair share of the taxes should have their citizenship taken away. I just get furious when I hear Warren Buffett paid only the same amount of taxes as his secretary, and that an organization like GE paid no taxes. That's an outrage.
Atlanta, Georgia. James is an independent. What are your comments?
Oh, yes. My comments are this. First of all, there is no debt ceiling in the Constitution. President Obama can raise the debt ceiling anytime he wants. Next to these Republicans, these people are actually traitors to this country. They don't want regulations. Stuff is poison and killing our kids from China. Everywhere, Japan, this meat is poison. They are strictly out to destroy this country and bring it down for the simple fact that we have President Obama in office. They said this is their number one priority is to make him fail. If you really look at what's going on, the reason why the economy is not taking off is because we're still in these policies of the Republican president. We still have these Bush tax cuts. We still have these 2 wars. We still have Medicare Part D. We are in a Republican administration that drug us down, and we're still going down. Look at where the debt came from. It came from the tax cuts, these 2 wars. The stimulus bill was a one-time payment. It is gone.
Oh, sorry for cutting you off. Eddie, a Democrat from Omaha.
Hi, I got a couple things I want to bring up. The whole thing about that Republican when he said that he had small business friends who went out of business and how he's now opposing this bill, or no, opposing the Consumer Financial Protection Bill is just funny to me. It doesn't make no sense. And then I think another big thing that could help out is they got to get these Wall Street guys out of the government. For Obama to have that one guy as the secretary and he used to work for Goldman Sachs is just ridiculous. That's the main reason why I think that we are still having these troubles, because the main people who started it who worked with all these past Republican and Democratic presidents still work for him today and still have, insight on what goes on with the government. I just think that I think that people need more of a voice of who is allowed to do this. This Consumer Financial Report Protection Bureau, I think the consumer should be allowed to choose, and not these Republicans in Senate or anybody else.
So we're talking about the new Consumer Protection Bureau. Today marks the one-year anniversary of the enactment of the Dodd-Frank Financial Regulations Act, which created that new agency. We talked with David Clark of Reuters about it. We're going to hear that and then take more of your calls.
Joining us, David Clark from Reuters. He covers, amongst other things, the banking industry for that news organization. A year ago, and even before that, we kept on hearing the term Dodd-Frank thrown around as far as legislation was concerned. Just as a point of reminder for folks, what was the purpose?
Well, the legislation was enacted in response to the financial crisis of 2007 to 2009. Which obviously led to a lot of bailouts of banks and other, AIG. So this was essentially the Obama administration and the Democrats in Congress' response to that crisis. It's intended to prevent a future crisis or make it less likely, and also to prevent future bailouts. Of course, there's a lot of controversy over whether that's what will happen, but that was the purpose of the law.
Controversy because?
Well, one of the big issues is, the idea of whether or not banks and other financial firms are too big to fail, meaning the government, if they are about to topple, will step in with taxpayer funds to bail them out. Proponents of the law and the regulators say the law specifically prevents this from happening. There's a lot of skepticism about that, both in the financial markets and from Republicans on Capitol Hill. They're arguing that if you look at what's happened to banks since the law was enacted, some of the biggest banks have actually gotten bigger. And the idea, and if you look at the credit rating agencies, which assess banks' creditworthiness, they actually have said they're not convinced that the government won't ultimately step in and bail out a bank if it's going, a large bank, if it's about to fail. Like I said, the supporters of the law say, well, the law specifically prohibits that, so it's a false argument.
So when the legislation was put into effect, could you generally talk about the avenues it took to try to prevent these things from happening again?
Sure. I mean, it's a huge law. There's a lot of different parts to it. But when we talk about too big to fail, one of the specific things that's in the law is, well, what does the government do with a financial institution if it is about to fail? So what they put in the law is what they call resolution authority, which basically allows the government to seize the firm and liquidate it in what they hope will be an orderly way. The intent would be to prevent the type of chaos that happened in financial markets when Lehman Brothers failed. So the law gives the FDIC, the Federal Deposit Insurance Corporation, the ability to take over this bank or another large financial firm and basically sell it off in parts. They say wind it down, and it's supposed to be a more stable way of letting this bank or large financial company fail, as opposed to just having it go through the bankruptcy process, which may not move as quickly.
And it's not been used yet to date?
No, it has not.
As we stand today upon the year anniversary, in a general sense, how much of the law has been put into place, or at least enacted in a working fashion?
Well, there's still a lot more to be done. So, for instance, there's different counts on how many rules are in the law. One law firm that tracks this, David Polk, has said there's about 400 rules, and they estimate at this time about 12% of those have been finally enacted. So when you look at the sort of big issues in the law and what's been done, the resolution authority or the liquidation authority I mentioned, the FDIC has put out that rule. So they've laid out, well, here's how this process would work. Here's how we would wind down these big companies. There's still a lot of other aspects of the law that have not been finalized. Some of the keys there are oversight of the derivatives market. The Commodity Futures Trading Commission has
on this vote,
put
the
out a lot of
yeas are
proposed rules that
170,
haven't been finalized.
the nays are